This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 1/22/24, show 557. And Nick, this could be the roaring 2020s. The major market indexes are rallying higher again.
Yes, they are, Kerry. We have another rally on our hands today. We'll see if it holds up. Last week we had a holiday shortened trading week with the Martin Luther King holiday. Last Monday we were closed, but Tuesday and Wednesday last week you had some softness. Thursday and Friday the markets took off. In fact, the S&P 500 index closed at a new all-time high after 2 years. So that was quite something. And currently the market remains strong and it is in a confirmed uptrend.
Yeah, what took it so long, Nick?
Well, you gotta jawbone, you gotta create the liquidity in the system, and that's what makes stocks go up. Everybody thinks it's earnings. Everybody thinks that the stock market goes up because the economy is good. None of that is true. In fact, it couldn't be further from the truth. Stock market goes up because there's liquidity in the system, and when the liquidity is removed, it goes down. Hence, what happened in January 2022.
All right. Well, hey, so we're into earnings full gear this week.
Yeah, this is going to be a wild one, Kerry. Last week we had predominantly just financial companies report. A lot of the big financials reported, a lot of regional banks. It wasn't very heavy on the number of companies that reported earnings. But this week we start to get, starting tomorrow, we'll get about 50 to 100 companies every single morning and evening reporting. So buckle up. This could be a wild earnings period. Companies have very little wiggle room in this environment. If they've gotten a nice bid already, so a lot of their good news is already baked in. It's going to be hard to come out with better news. So you're going to see some companies, really get clipped. I'll give you a good example of that today. Archer Daniels Midland, I believe, guided lower. That stock is trading down as we speak by about 13 points. That's a 20% decline today. So that's the kind of stuff that you can see more often this earnings period. If companies miss by a little bit or they guide down, they are going to get punished.
Speaking of down, gold is trading lower today.
Yeah, we have gold a little bit lower today. It's not a terrible showing for gold today, as it has been pulling back, but down about 0.2%. I don't know if we can make too much out of today's action, but what I will say about gold is that for the last 3 weeks, we've been, slowly dipping, and then you get these little rebounds, and then we go higher, we go lower. If you're taking a look at the S&P 500, we talked about the 2,000 level. We got close to that about 4 days ago on the 17th of January. That's still going to be some support. The next big support level for gold that I see is going to be 1,900. And if it doesn't hold 1,900, watch out below, because we could get one more big downdraft, and then you get gold into a 1,600 handle, buy it with both hands. Apparently, if that were to happen, most people would be scared. But that's where you would really have to dig in and pick it up there. But gold has been a trade where everybody's been looking for a breakout, and it just hasn't happened yet. But we'll keep it on our radar. We'll keep watching the charts. Charts are going to be very important over the next few weeks.
And silver has been really weak. It's trading in the low 22s there.
Yeah, silver's still weak. Weak today. Again, it's down 1.5%. If you look at silver futures, we talked about the big support level being at $22. So we're getting down to that area. Silver, believe it or not, right around 9 o'clock this morning, caught a little bit off the lows. So it's trying to make a little comeback here. We'll see what it does by the end of today. But more importantly, the weekly close will be very important. Like I said, there's going to be some daily chart support right around the $22 area, give or take 10 cents or so. And we'll see how it plays out by the end of the week. But silver has been lagging gold, so you still want to be a little bit cautious with silver. Longer term, Kerry, if you're a longer term investor, I love both gold and silver. I love silver even more than I love gold. But again, silver at this moment is lagging the gold price. So just be aware of that.
All right. And finally, the erstwhile cryptocurrency still trading over 40,000.
Yeah, crypto has had a really good pullback since those spot ETPs have been released. But even today, I believe you got Bitcoin down about 2.8%. I think, as you know, Kerry, we talked about on the program last week that I believe Bitcoin futures should go down to around that 39,600 level on the daily chart, perhaps 39,700. It's such a big price that you got to give it a little wiggle room there. But around that level, and we are getting there as we speak. So again, watch that 39,600 level for Bitcoin futures. There will be some daily chart support there. That'll hold up for 3 to 5 days at least, and then we'll have to go back to the drawing board because it has been nothing but a complete buy the rumor, sell the news event with Bitcoin so far.
Okay, and that is it for today. We'll be back on Wednesday. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. And your emails are always welcome, kl@kerrylutz.com. And leave your comments below on the YouTube channel if you're watching us there. And please like, share, subscribe, whatever platform you're on. And Nick, we will catch up to you on Wednesday.
Yes, see you Wednesday, Kerry. Thank you.